This is the London Fintech Podcast, bringing you practical insights and approaches, stories and inspiration from the innovators who are building the new world of financial services. Welcome to London Fintech Podcast. This is a really topical crossover episode for me. It's covering crypto, institutional blockchain adoption and AI together. I'm going to be talking to Yuval Rooz, the co-founder and CEO of Digital Asset, and they are the parent organization driving the development of the Canton Network. Canton is the only public layer 1 blockchain with privacy and has gained significant traction as an institutional-focused blockchain, as evidenced by several recent deals, which I'm sure we'll talk about. Yuval played a pivotal role in the formation of the Canton Network. Welcome, Yuval.
Thank you. Thank you for having me, Tony.
No, it's great to be able to talk about this. You know, I've had quite a few crypto pioneers on the show. I've had folks from Franklin Templeton. I've had founders of some of the other blockchain networks. And it's really interesting to sort of fill out the picture with what's happening on the institutional side. So we're going to get into that. Perhaps before we do, can you just tell me a bit about your background leading up to working on Digital Asset?
Sure. So I studied electrical engineering. And as one does when they graduate from electrical engineering, they join a hedge fund. So I joined Citadel. Was the first place I went to work, and then from there I moved to a trading firm called DRW Trading, and Digital Asset is my third job.
Yeah. And what was it that perhaps was the catalyst to getting into and starting Digital Asset?
I've always wanted to be an entrepreneur. I always wanted to start at something myself. And I was very fortunate that DRW at around 2012-13, I got exposed to crypto. DRW is one of the first trading firms that started trading crypto. So I got exposed, and then the guy who started the crypto trading arm at DRW and myself left DRW with the support of the founder of DRW to start Digital Asset. And I'm sure we'll talk in greater detail why we started the company and kind of what was our vision.
Yeah, and it's been quite a journey, so we'll come back to that. But just before we dig into Canton and how it works and the journey that you're going on, when you're not working, what do you do to decompress and perhaps rebalance?
So there's these days not much of not working, but I try to work out 7 times a week.
Okay.
I used to do a lot of triathlons and Ironmans. I don't do those anymore, but I swim, run, and cycle every day. That's pretty much my only downtime to decompress. If there was more time, I would do more photography. I used to do a lot of photography.
Okay. And are you a morning athlete or an evening athlete? Some of the folks I talk to, they're up at 5 a.m, and that's when they hit the gym or hit the road.
4:30 is my morning alarm clock.
4:30. There we go. Crikey.
I go to sleep very, very early too.
What time's bedtime?
9:30.
Yeah. Okay. Yeah. Well, I think you're still getting enough hours, and I'm sure the rest of the time is consumed with everything you're doing on the business. But it's a good combination. So triathlons, Ironman. I mean, you talk to people who've done one or two occasionally, and I do have some friends actually who are sort of serial Ironman people. But sometimes you do one and that's enough, right? You get the tattoo and you don't go back. Pretty hard stuff.
It's good if you want to be an entrepreneur to do endurance.
Yes.
There's a lot of analogies there.
Yeah, a lot of resilience involved. Okay, so let's talk about being entrepreneurial. So Digital Asset, Canton. So tell us a bit about the blockchain ecosystem leading up to the Canton idea and perhaps the gap that you're really addressing.
I mean, if we take a step back and depending on the audience and really, do they really understand like why blockchain? Why has everybody been talking even about crypto blockchain and just generally speaking these technologies? What I like to remind to people is that the financial industry is the only industry to date that when we click on something, that something doesn't actually happen. We think it does, but it doesn't actually happen. I sometimes try to tell people, imagine if you clicked on a movie on Netflix and it took you T+1 to start playing the movie, or a song on Spotify. And you could just keep on taking some of these retail experiences. And the reality is that although there have been quite a lot of innovation in the fintech space from a consumer experience, the settlement or the time that the transaction that you've actually triggered with your iPhone or with your Android or with your credit card, or when you click on a trade on Robinhood or, choose your broker dealer, that transaction doesn't actually get processed in real time. That payment doesn't actually happen. That security settlement does not actually happen when you did that trade. And although that at the consumer level, we think, we were able to grab the product that we just purchased, we were able to watch the Amazon movie that we just rented, do all of those things, we get that immediate gratification. We as a consumer are not very sensitive to the cost that is associated with it. But the reality is that there is nothing that comes for free. And as a result of everything that is so clunky that happens after you did that gratifying, tap or whatnot, that comes for a cost. That friction that happens after that transaction has quite an enormous cost. The fact that it takes money to arrive at its destination for a very long time means that someone is missing, let's just say, on the interest of that money, right? The fact that it requires a lot of people to reconcile transaction, that costs a lot of money. And the reality is that what we call the post-trade, it's meaning everything that happened after the transaction have taken place, is an industry of hundreds of billions of dollars.
Mm-hmm.
And guess what? Nothing is free. And as a result of that, maybe we as the consumer don't see all of that in the itemized receipt. Hey, this is how much you're paying for people in India to reconcile your payment. This is how much you're paying for, like all of those things. We are paying for it.
Yeah.
At the end of the day, we are paying for it. And, so the opportunity is not necessarily that consumers immediately will see so much benefit, but it's actually, there is an opportunity kind of very similar, and we'll talk about AI. There's an opportunity to take a lot of fat out of the system. And it's fat that is not necessarily creating value, to be clear. I think that that's an important thing to say. And so that's one component why this technology is very important. And then the other is because all of these, what we just said, post-trade systems have been very outdated for so long. Some of the things that happened is that the utility of our assets is very limited. And what I mean by that, our assets have very one dimension. I can kind of buy and sell stock. But at the end of the day, we know that stock has value. And today, for example, as consumers, the one most popular lending products that we can do where we can pledge one of our assets as collateral against a loan is a mortgage, right? A mortgage is, we put the deed of our house as collateral against a loan that we receive from a bank. But why can't we do that on our stocks? Why can't we do that on other assets that are in our possession? And the reason is because the pipes behind the scenes are so complicated that actually making these transactions become a reality is so expensive that actually generating these loans is not really like an interesting market to open. So there's quite a lot of opportunity why people have been excited. And that's really what triggered me to go on this 11 years journey.
So the assets are tied up or immobile. There's a lot of cost and friction in the system. So the interchange fees and the bank charges. And, I did a stablecoins episode last year. And one of the sort of nuggets there was that I believe this to be the case, that if you send Singapore sterling on Swift, it takes longer than getting on the aeroplane to fly to London. So there's this sort of argument for taking the time and the friction out of the network. Okay. But I think if I'm right, Canton's a particular blockchain. So you're a level 1 protocol. So you've built your own blockchain, but you've addressed particular weaknesses, I guess, in the institutional grade chains that are out there through building your product. And if I'm right, perhaps you can expand a bit on where you've gone with Canton.
as I just explained why I got really excited about this technology, generally speaking, our view was that at the end of the day, if we really want to have, large scale adoption of this technology, kind of like think about like if the internet was just a consumer product, I don't think you would have all the innovation that you had on the internet. Because at the end of the day, it's institutions that bring a lot of the flow and a lot of the value to networks. And for us, I mean, most layer ones today are inherently transparent. You get to see everything that is happening there. People will say it's pseudo anonymous, but I remind people are being kidnapped these days in France. So clearly people know who has assets. And, our view is that, getting kidnapped, first of all, is not a good outcome. But even if you don't go to such drastic measures, most publicly traded companies that have nothing to do with crypto would never adopt crypto if you told them the outcome of that is that the whole world would know what is your activity before you report your earnings.
Before we jump right into today's episode, a quick thank you to our sponsor, NextWave. NextWave is an award-winning consultancy that is helping many of the world's leading banks, investment managers, and insurers deliver on their growth, efficiency, risk, and control goals and transform their businesses. With a senior team who have come from MD-level positions in major firms like HSBC, Barclays, and UBS, NextWave has both the deep industry expertise and the hands-on capabilities in AI, data, and automation to drive real results. More business outcomes and less PowerPoint from the consulting experience, as their clients like to say. NextWave has moved 2-week manual processes to 5-minute agentic automations, rescued global banking regulatory control programs, and digitized deal platforms, sustainability, and regulatory reporting systems. And they do much of this with hands-on engineering capabilities on leading technologies, which include ServiceNow, Alteryx, Quantexa, and Camunda. So if a modern and specialist alternative to the big brand consulting model sounds appealing, one which covers the full life cycle of strategy specialists and solutions, but with small practitioner teams, rapid delivery, and a better price point, then perhaps you should talk to NextWave. Visit nxwave.com to find out more and get in touch. That's nxwave.com. All right, let's get back to the episode. Well, tell us a bit more about that story then, because I may have missed that one. We do think that at least majority of folks, I think, would think that blockchain is somewhat private. Yes, you can track the blocks, but how can you identify people? And are people who's being kidnapped in France?
A lot of crypto founders are being kidnapped in France. France is the number one. France is leading the charge on crypto people being kidnapped.
Okay.
Yeah, there have been multiple.
And forced to reveal their blockchain keys and give up their
Correct.
assets. Is that what this is about?
Exactly. Absolutely. There have been multiple, and unfortunately, even on a personal level, someone that I know, almost something like that happened to the individual.
And they can be tracked down from the tokens that they're holding on these public networks?
So, I do something very nice, Tony. I just say, hey, can you send me let's do a transaction. Send me 100 stable coins, $100 in stable coins. And now on the public blockchain, I can see which wallet you initiated that transaction from. And now I know that that's your wallet. And I can see everything that you do in that wallet. So I don't need the wallet to say Tony, I guess is my point.
Yeah.
And, there are multiple tools today. I mean, you can input someone's email address, phone number, and there's multiple tools that will give you all of that person's on-chain activity. And that is by design, by the way. So our view was that will never fly, definitely not for institutions. My view is that also individuals would prefer privacy, but, retail are much more accepting. Like, for example, on Venmo, people will share all of their financial transactions with sometimes just with their friends and sometimes with the whole world. I think that corporates will not behave like that. So when we started the journey, our initial thesis was maybe the short game will be able to work without privacy. The long game, privacy is a must-have. So we started a journey and we've built, as you said, a layer one that was designed for institutional adoption, but not just for institutions, but it was designed that institutions can adopt it. And, so far it's been very successful. We've been working with some of the largest financial organizations in the world, both in capital markets, but also in insurance and other industries. And, now the interesting thing is, as a result of all of the things that I've said, it's also now starting to leak into the retail awareness that privacy is something that is achievable. Till today, everybody thought that privacy was not achievable. Now, suddenly, in the last, I would say, 6 months, privacy has become like the biggest topic in this industry because people are saying, well, if it's available, I would much rather have things with privacy.
Yeah, well, especially when you explain, as you did a couple of minutes ago, some of the real world consequences, and that's, you know, maybe that's just my ignorance, but I was not aware of that story and that threat vector essentially for anyone who's holding a wallet. So, it really shines a spotlight on the privacy issue. But you started working on this, I think, 11 years ago with
11
Canton.
years ago. Yes.
Yeah, your biggest headlines and go lives on the latest innovations on the chain are only in the last few months, I think. So, can you tell us a bit about that journey? I mean, was that a conscious 11-year build cycle, or is that somehow? Yeah, well, tell me how did that come
No,
about?
this is just good marketing strategies. No, we've had a lot of these institutions work on Canton for many years,
Yeah,
but you wait for the market to be ready to absorb, and you wait for the right timing on when to educate everyone about everything that have taken place. But the likes of Goldman Sachs, HSBC, BNP, Broadridge, those type of organization have been working on Canton for years. But I think that as a result of, like I said, privacy becoming a hot topic, suddenly Canton became more in the spotlight. But probably the most important thing is because a lot of people are talking about tokenization, effectively, how do you put equities on blockchain? The fact that DTCC selected Canton as the first network where they're going to put DTCC securities, and happy to explain what is DTCC. That really brought Canton kind of to the spotlight recently.
yeah. Let's talk about that for a minute because I want to come back to understand a bit more about the build journey. But seeing as you've mentioned it, and I think that was one of the most prominent recent headlines. So tell us about the DTCC deal, sort of why now and why that's important.
Yeah. So listen, I mean, I'm not going to speak on behalf of the DTCC, so I'm just going to speculate kind of their thesis. But the DTCC is the central security deposit of the United States. It's the largest in the world. They house close to $100 trillion worth of assets, so not an insignificant number. And they hold U.S. Treasuries. They hold pretty much the entire U.S. equity market, U.S. municipal bonds, U.S. corporate bonds. So quite a lot of very important assets that sits in their trust. And they received recently a green light from the SEC to actually bring these assets on chain. And my view is that, some of the things that we talked about, privacy, which a lot of their members would really care about, has played a very important component in that decision. And again, I always like to clarify that we don't necessarily have some exclusivity from the DTCC, but we are just the first that they have selected to work with. And because there's so much excitement about the unlock of the potential of putting US equities on chain, that's why generated quite a lot of news recently.
And how long was that in the works before you were able to say something? You said it's been a bit of a stealth build with the likes of Goldman's and others. Was the DTC deal sort of something that was there in the background for a long time, or did this all happen quite quick?
No, we've been working with the DTCC for a very long time. We didn't show up one day and the DTCC was like, "Oh, Canton looks interesting. Let's sign a contract." This is our relationship that have been fostered for a very long time, and they've known us for quite some time. Again, the one thing that I sometimes think that people, when they look at crypto, they're like, "Why is it taking so long?" And then I say, $100 trillion. The systems that we're trying to replace have been built for many, many years. It has a lot of history. Some of the history is things that should change. Some of the history are good lessons that we should learn. And, replacing financial infrastructure is not something that happens overnight. And to be honest, not even over 10 years.
Sandy Call from Franklin Templeton was on talking to me a few months back. I'm sure it's someone that you know. And, she talks about the next 50 years of finance. And of course, we're comparing that to the last 50 or 100 years of finance and the rails that the industry runs on. These are not changed overnight.
No, they don't. They don't. They truly don't. And I think that, the people that are responsible, whether they are the DTCC or Sandy's company, Franklin Templeton, which manages also assets in the trillions, they have some significant responsibility on transitioning that in a way that doesn't risk their fiduciary duties to their investors. So these things are complicated. They take time, but I think that we're heading in the right direction.
Yeah. So let's just loop back for a moment on Canton's journey, because I think when you launched the network, you consciously did that differently to some other blockchains. And I understand there was no initial coin offering. There were other features of how you've gone about building the network. Great to understand a bit of that. And, if you didn't do an ICO at the start, how was this all funded at the start?
Yeah, I mean, it's funny. A lot of people ask me that question, and I'm like, well, there have been these models called venture funding, and like we just did it the old traditional way, and we've convinced investors that this is something that is worth investing money in return for equity in the company, and there was no guarantees. Yeah, we didn't do an. Our view was that the ICO market, in my opinion, in many cases, you see great examples. People bought tokens in an ICO and made money. In most cases, they've lost money. And again, if our view was that we're trying to build, like I said, something for the next 50 to 100 years, we had no rush to write a white paper without knowing if that white paper would actually result in the outcome that we said we're going to have. And therefore, we didn't want retail investors to take that kind of risk. So we've funded the business the traditional way. Sophisticated investors took all of the capital risk. And when we felt that the technology was ready to launch a public network, we did a fair launch. We didn't sell tokens. We started like Bitcoin from zero. And our view is if we bring actual value to the real world, that's the only way that why the network should have real value, not because we've come up with a white paper and said that that's going to change the future.
Of that, and I guess you're proving that out now. But back then, I mean, it's interesting that this is such a progressive next gen network, and you've gone for a good old fashioned TradFi VC raise at the beginning. But it must have been pretty progressive
Yeah,
venture
not
firms
everything.
at the
Yeah, not
start.
not 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 everything. Not everything that has been done for the last I don't know how many years is wrong,
Yeah,
right?
yeah,
You know, it's not every new idea is necessarily a good idea also, right? So I don't know. No, I mean, to be honest, most of our investors are pretty conservative organizations,
yeah. And
including
did
some
they
of the
get it?
banks.
Did they get it back then though? When you were saying here's the white paper, here's the plan. Did you have to work hard to explain the opportunity ahead and the approach, or was it something that even 10, 11 years ago, the right folks understood very quickly?
Have you ever learned how, a lot of the chip companies, not chip like GPUs, because we're going to talk about, but like chip,
Yeah,
like the food,
French fries.
they got French fries or like potato chips. And they've been criticized for having too much sodium. If they were to cut the salt in their product by 80% on day one, nobody would eat it. But what they've been doing is slowly reducing it, right? So you take it in bite sizes. You don't immediately, and as a result, the consumer doesn't notice the difference. So the reason why I told you this story as a response to your question, you couldn't 10 years ago go and lay out. And to be honest, I would lie if I said I had it all laid out in my head 10
Mm,
years ago.
I'd be
And therefore,
impressed.
yeah, and I would be a liar if I told you that. So, a lot of times I say, one of the benefits of waiting to launch the network and being very patient is I looked at all the scams that other people have done and all the bad things that
Okay.
people have done. And, who knows, maybe I would have done them if not the scams, but the bad things, like if we launched early. And there's a benefit to sitting on the sideline and being patient and learning and adjusting. So we didn't know everything, but to your question, inherently moving markets on chain was always the pitch. Solving for privacy was always the pitch. But a lot of the nuance and a lot of the details and a Canton network and the economics of it and how it works and why is it supposed to be this way was not there on day one. It wasn't. But we are fortunate to have partners that, not all of them, but some of them had the patience to actually stick and kind of double down as we grew.
So you were resolute on those guiding principles at the beginning and very confident that was the right thing to do. And then you navigate from there incrementally. And I
Yes.
totally get that. I mean, that's kind of what I'm doing on the consulting business in our part. There's no way you can map out the detailed plan for everything that's ahead because you just have to navigate with what's in front of you. Interesting about your partners, though. Have you had a bit of a rotation? You've had some sort of dropped out, other people who've come in along.
Yeah, we had people that dropped out. I wouldn't say that it's anything significant, but yeah, we did have definitely people that didn't stick all the way, and that's okay. I mean, that is totally fine.
And now you got to the point where the DTCC is putting their assets on your chain. Broadridge, I think, processes 300 to 400 billion in repo transactions on the train. Is that right?
They do. They do.
Yeah. And that's daily,
Yes.
if I'm right.
Daily. Yeah. So we do today, I mean, Broadridge does today, I would think, close to 30% of the daily volume of US Treasury repo, which is massive. I mean, that's a significant achievement. But we have life insurance companies, annuities, commodities, mortgages, private credit, private equity funds, fixed income products. I mean, there's a good amount of things that are happening across the board that are really transformational.
So what's the sort of total volume that you're doing on the Canton Network every day then?
It's a good question. I mean, I would have to guess that it's getting close to a trillion, but that's the double-edged sword of privacy, right?
Yeah.
Because I don't necessarily know
It's
what all of the we're trying to convincing enterprise clients, can you please tell the world what volume you're doing, is not something that they're used to do. So convincing them also to actually reveal their activity is sometimes a challenge
No, I
by
get that. You
itself.
say that we're the private chain. We keep everything private. Hey, would you mind sharing sharing the numbers? I guess that's a little bit pulling in the other direction. Tell me a bit more about Canton as a company then. So you started 11 years ago, you do your raise, you've been building out incrementally. I spoke to the European head on the Solana network, and we were talking about, hey, how big is Solana? And the answer was, I think about 70 folks, and it was completely decentralized. So I said, "Where's the office? Oh, we haven't got one." It's this DeFi world. Is that the way that you're set up as well, or is it?
So Digital Asset, my company, has multiple offices, but we're decentralized in the sense that we have a big office in New York and in Zurich and London and Hong Kong, but we're a traditional company, like nothing. The foundation that governs the network is constructed of both crypto companies, non-crypto companies, all kinds of companies, and that organization is distributed, but it's mainly because it's a foundation. It's not constructed by just one company.
Okay. So I wanted to also talk about AI in this conversation. So we've talked quite a bit, I think, about the Canton Network and how you're different to other protocols. And I know you have a perspective on AI, and we're seeing a crossover in all the conversations I'm having around, stablecoins tokens are going to be the currency that agentic AI uses to operate. And I hear that quite a lot. But there were two or three things I just wanted to dig into here. Which pieces of financial infrastructure do you think need to upgrade first to handle AI-driven markets?
There's a lot of things. I think that the settlement layer, if we're going to use agents to make payments, the settlement layer is critical. So I think that there's validity of talking about blockchain because, again, if you're going to say, we're going to do so many transactions, but again, we're going to have, like I give this example. When the US wanted to move from T+2 to T+1, there was a big concern with the market participants actually be able to handle the volume associated with these markets, because now suddenly from T+2 now T+1, and again I mentioned a lot of manual reconciliation. So if we're talking about increasing that volume of transactions, not X, not 3x, not 10x, potentially X, because of all of these tiny transactions that are all. If we're not solving the settlement layer, there's no point talking about that front end doing all of those transactions, because the system would just implode. This is where we started when we started talking about the challenge is when we just do these taps, we think everything is working. We are not exposed to the spaghetti that is happening behind the scene. And that's, I think, the reason why the narrative around blockchain being extremely important for agents, I think there's validity in it, because again, we need to upgrade the post-trade infrastructure to support higher volume. And agentic AI is effectively just saying the volume is just going to go up. So that I agree. I think that there's a whole part of infrastructure that is also needed in terms of the safety mechanisms that are associated with AI. And what I mean by that is that, there's a lot of conversations about, if now we're going to have, what are the risks that are associated with it? So recently, I can remember I read, I think it was on Polymarket, someone had a bot. The bot was making good money, the AI agent, and over some period of time made like close to like $3 million, and then lost the whole $3 million on one bet. So the question is, if you remember, like when cash was mainly physical and then the internet came about, well, it became easier to do a bank run, right? Because now you didn't have to go to the teller to ask for the cash. Now you could just send a request to pull the money out, and that's it. So I think that very similarly, if we're going to start having all of these payments, there's quite a lot of investment that needs to take place in kind of like the whole infrastructure of safety. What are agents allowed to do versus not? But if I bring it back maybe to blockchain, there have been a paper written by, I don't know, I can't call him a friend, but someone that I know. His name is Christian Catalini, about how, when you look at the outcomes of AIs, a lot of times they end up in really bad outcomes. Like they let AI agents play war games, and in like, I can't remember, like north of 70% of the time, they end using the nuclear bomb, like things like that. And his whole paper talks about how in the world of AI, we're still today undervaluing the value of verification, meaning actually verifying that the data that is being given or used is correct. And I actually think that that's another place where blockchain can play a significant role of confirming the validity of data.
So verification of entities, individuals, and data. We're talking about upgrading for volume. I think you're upgrading for speed as well, because you need to run at machine speed. I can't imagine a wallet-based world if you're waiting for sort of traditional settlement cycles, because I'm just not sure how networks would even handle that.
That is correct. And again, I think that's correct. That's generally speaking correct. And that's, it's speed and like I said, settlement of money movements should become instantaneous in order to be able to make this work.
And Canton is positioned to really solve for all of that?
I sure hope so.
Yeah.
I sure hope so.
You're
not gonna hear me say no.
Well, what sort of AI integrations and AI commerce uptake are you seeing at this point on the net?
Yeah, listen, I think that a lot of people are still talking about it. We are definitely integrating, but I would maybe you'll notice by the time we're done, I don't like to market too much of what we don't have. I think that, there was a recent McKinsey report about stable coins. And, a lot of times you'll hear stable coins is the only asset class in crypto that achieved a product market fit. And really, when you end up looking at the utilization of stable coins, for the most part, north of 90% of it is for crypto activity related. So what we're trying to do is actually try to focus on showing that we can actually solve companies that have nothing to do with crypto, solve their corporate problems using crypto rails. To me, that is more important. Once you do that, then you do the integration to AI to scale it. What I mean by that is you want to do corporate treasury. So you want to manage the treasury for a large global corporation. You want to be able to move money globally 24/7. You want to move from cash, non-yield assets to yield-bearing assets back and forth. You really want to show that using this technology, you could do that significantly more efficient than you would have done on traditional rails. Amazing. You showed that there's a business case and that from an architecture and Rails perspective, the technology does what it's supposed to do. Now integrate to AI agents to optimize it and scale it and do it at a whole different level. So we're more focused right now. It's not that we're ignoring it, but what we're very focused is to actually show that with privacy, with the technology, we can solve problems and then use AI to scale it.
Yeah. So you're really giving the platform and network essentially as a tool is a bit simplistic of a label. The agents, the agentic capabilities using the network as a transmission and a privacy platform to deliver on the value exchange and the movement of securities and all the things you were talking about. Yeah. So where do stablecoins fit into this agentic world?
I mean,
What role do you see?
stablecoins are one mechanism how you could move assets. I think that it's important to understand that the reason why stablecoins have become such an interesting topic is a stablecoin is really a bank that has no borders. But really, when I send you, Tony, a stablecoin, it is no different than a Venmo transaction. What did Venmo do or Cash App? They just said, hey, we'll create one bank account. And within that bank account, we have subledgers. So, Tony, when you send me money on Venmo, we're not really moving money outside of that bank account. It's all within that bank account. We're just doing a line item change where we say, okay, Tony has just ledger entries. And therefore, you're not asking a bank to settle money inside the bank or even outside the bank. You're just literally, the account as a sum did not change. So we all see that it's when you want to send money into Venmo or outside on Venmo, suddenly there's friction. But if you want to move money within Venmo, free, real time, 24/7. I mean, Venmo was the first stablecoin. I mean, it really was, right?
Yeah, I
It just
guess.
didn't call itself.
Yeah.
So when we send stablecoins from one wallet to another, we're just doing a Venmo transaction. That's really all we're doing. The uniqueness, though, of stablecoins, and this is where I'm not trying to diss stablecoins, but I just try to bring perspective, is composability. And that to me is where blockchain is very unique, right? If I wanted to settle a Venmo money movement against a settlement of an equity transaction, that wouldn't be possible. And that's actually where blockchain becomes interesting, is not when I move a stablecoin from one wallet to another. I honestly don't think that that's interesting. The interesting part is actually when you want to give you a guarantee that settlement of cash will happen at the same time that an equity moved or that some asset moved. And this is really where the real value of blockchain comes to light. I don't know if that's very clear from my explanation, but really just moving a stable coin between two wallets is no different than Venmo.
No, and presumably because stable coins can be exchanged for fiat currency, if your your agent army, your agent network are transacting, that's a way of getting the value onto chain and having the agents execute on those transactions. using stablecoins. But I think what I was hearing is maybe it's more for the institutional world, but you can do the same thing on a private network on.
Yeah, again, all of the things that you can do on stablecoins in other networks, you could do on Canton with
There
privacy,
you go.
which to me is strictly better.
Yeah.
But I just try sometimes to explain to people because they get so excited about stablecoin. Moving stablecoins from one wallet to another, in my opinion, is not necessarily the interesting part about stablecoin. The more interesting thing about stablecoin is that you, for the first time, have a representation of money on the same ledger that you have a representation of equities or private credit or life insurance. I mean, if you think about it today, the term in fintech, settlement risk. What is settlement risk? What
Risk if
does,
you're not getting your money.
or not getting the asset that you paid for? It could go both ways, right? So settlement risk is really just saying that because I have to coordinate two ledgers out of sync, one of these things can fail, right? Why do we create escrow accounts? To prevent settlement.
Escrows, clearing houses, yeah.
Yeah, exactly. So the reason why stable coins actually, in my opinion, are more interesting is not because I can send stable coins from one wallet to another 24/7. That is actually not that interesting. It's because for the first time, you have a representation of money and assets on the same protocol, on the same layer. And you could give the certainty that if this doesn't move, this doesn't move, or if this moves, this will move. And you get rid of settlement risk. And that, again, back to where we started, a lot of money, a lot of risk, a lot of friction, and. And that goes back to the point where I said, because all of these assets are now finally coming to be on the same layer, you can introduce products that, a year ago, 2 years ago, you could only dream of. Like, I'm going to give you, Tony, $100,000 of of my equities that are on chain as there is for a loan, right? It's no longer just the deed of your house. That's really what bringing all of these assets into the same protocol is opening the door for. And that's why stable coins have, in my opinion, became such an interesting asset.
You sort of got instantaneous delivery versus payment on the same chain. And you can do things like intraday loans. You could lend me, for 10 minutes or for 10 days or for 10 years.
Exactly.
So
there's actually a term in crypto called flash loans, which does
there you
exactly
go.
what you said.
Yeah.
Yeah.
Hey, I know more than I thought I did. There you go.
Good.
Learning something with every conversation. So look, we've talked about Canton's privacy network and some of the aspects of AI-driven commerce and how that crosses over onto blockchain networks. And we also touched on sort of modernizing and taking a treasury function onto chain. And that is a nice link actually to what I wanted to ask you about, where you think big finance is at the moment. So, and I talk on this show from time to time with some of the large banks and some of the scale investment managers or corporates, and folks I think at very different levels in terms of their crypto maturity and the journey that they're going on. Some have done absolutely, a majority I think have done very little, if anything at all. And then there are some very progressive organizations, and Franklin Templeton's one of them, of course. But what's your take on where the financial institutions are on the crypto journey at the moment? And, sort of not just sort of buying into the new rails of the sector, but actually adoption and changing their operations.
30% of the daily volume of US Treasury repo market. This is only banks. So maybe for your listener, what is repo? Repo is when I need money and bank to bank would give US treasuries for a loan of cash. And it's really just to meet their capital requirements. Regulators requires banks to have a certain amount of money on their balance sheet. And if they don't have enough cash, they can use some of their treasuries to borrow cash from another bank. It's I think like a $12 trillion market daily. Every day, $12 trillion
And they're
worth of.
relatively short dated, aren't they? They're sort of, it's an
Historically
overnight or it's.
overnight,
Yeah.
exactly. But
Yeah.
it's the backbone. It's the backbone of the financial system from a stability perspective. I don't know if we do 30% of the daily volume. on this technology. I don't know. I think it's pretty significant. I mean, if the DTCC is moving its securities to run on this technology, I think that that's very significant. Those are the things, in my opinion, that make all the difference. I sometimes joke where I say, I get invited to a lot of boards and I talk on boards and I participate. And you still see on boards, what is our cloud strategy? Does that mean that cloud is not here? No, it is. And I think that we are here already from an institutional adoption. The question is now every year, how much? So, we are still early in the journey, but I think it's here. The institutional adoption is here. I mean, I can't tell you of any major financial institution that in some shape or form is not participating in this space.
Ah, that's interesting. And the corporates? So if you go Fortune 500 treasurers, how many of those firms are on the journey?
Less, but again, the reason is because they are not financial companies, right? So what they would do is they would say, hey, if you offer me a product where I can understand how that as a global corporate is going to make my life better, they will use it. Corporates are not going to not use technology because it's blockchain or whatnot. Corporates are here to satisfy their daily business. But if you went to a global corporate and said, I can bring you whatever, on your cash buffers, you could generate X amount of percentage points of additional yield. And here's how you do it without disrupting your day-to-day activity. But I just can perform to you that as a fintech solution.
Yeah.
They will sign up.
Yeah.
They will sign up. And that to me, back to what I was saying, is like, well, if everybody on the street gets to see my activity, no thank you. If I have risk of that money getting lost, no thank you. But if you're saying like, listen, I expect this to behave like no different than some of my banking relationships, but now you're saying I can move my money 24/7, I have enough liquidity, I can move my cash into yield bearing assets and
Yeah. And is
corporates will
that
sign
is
up.
that the pitch that you and your team are making? A corporate signing up directly? I'm actually interested whether other firms are building on top of the Canton Network and thereby offering some sort of service or protocol that's sort of underpinned by the privacy
Yeah,
network.
there's a company, there's a fintech called Treasury Spring. That's
Mm.
can imagine that's what they do, and they
Yeah.
actually just posted an article why they're building on Canton.
Yeah. Very good. Okay. So, what do you think's coming next in crypto markets?
Markets are going down. If we're looking at real time updates, they're currently going down. I think the reality is, I think investors are looking for kind of similar to what the comment I made about show value, show utility. I think people are asking to see more utility from this industry. And I think the sooner we provide it, the better, right? Like the better it will be for the industry as a whole. So, what's coming for crypto markets, in my opinion, is, certain, hopefully us included, are going to start showing real value. Back to that example about corporates
Yeah.
and those will shine. I mean, I think we're in crypto. I don't know if we're exactly there, but we're very similar to, a dot-com moment. A lot of excitement for the last few years, tons of money poured into white papers and ideas that haven't materialized. And I think that you will see a good chunk of them go to zero. And those that actually solve real world problems, that actually address utility for businesses that don't care about crypto, but want to operate more efficiently, will become, the magnificent seven of tomorrow.
Yeah. So the protocols that can really solve real world problems. Okay. And what's next for Canton itself? Is there anything in the works? If I ask you for any big reveals, clearly the answer may be we'll have to wait for the big reveal. But are there some things that you can talk about that you and the team are working on?
Very focused on executing against the DTCC project. I mean, that is a top priority, and hopefully more to come later this year. That is a huge priority for us. Hopefully within the next couple of weeks, things around payments that are very exciting.
Okay. Well, depending when we publish this, I might be very close on a couple of weeks. So we'll see whether you've put any more headlines out before or after we go live with this episode. Look, we're going to
Of
run
course.
out of time, Yuval, and I'm really grateful you taking the time to really unpack everything about Canton. And just sort of as we close out, anything interesting that you're reading or listening to that you might recommend to the audience?
Damn, the book question. I haven't read for a long time, if I'm being very honest. No, like I said, it's the morning workouts is kind of currently these days the only mental
Well, it
the
could
only
be a
mental break.
podcast or it could be a YouTube reel. I mean, these days there are a few people who actually say they are reading because we're all time slicing it or listening to something while we're in the gym or somewhere else.
So it's interesting. There's a book by a Japanese author, Haruki Murakami, that talks about what do I think about when I think about running, and what he definitely not do is listen to anything. So I kind of take his mental model. So when I work out, I don't listen to anything.
Okay,
Silence, you know.
creating a bit of space, but that's
So
creating,
I'm
creating
sorry. I'm
space is very
sorry for
important.
being a bad participant because
You're not a bad guest, but there's going to be a little gap in the show notes where Yuval's recommended book unavailable.
hey, I just recommended. What do I think about when I think about running? It's a great book.
There you go. Well, that's it. That's it.
Yeah.
And if folks want to find out more about you, on obviously Canton, I guess go to the website. But
Yeah,
you're up on the socials as well.
Canton.network. Yeah, Canton.network. I'm at Yuval Rooz on X, and the company is digitalasset.com. So yeah,
Yeah.
any of the above.
Yeah. Well, look, I thank you so much for taking the time, and I wish you every success going forward. I think the milestones that you've already achieved. I mean, it's an interesting story. It's slow and steady. It's institutional from the start. I love the sort of the enterprise reveal and go live almost after a decade of development, and we're still just sort of getting started. Despite the big numbers in terms of what's on the network, I feel the sector is still in the foothills of all of this, and so there should be a lot of runway ahead.
Absolutely.
Thank you.
Awesome. Thanks a lot, Tony. Thanks for having me.